Hello again. Welcome to Professional Insights, brought to you by the National Referral Network. I'm already fumbling, Charlie, but I'm very fortunate. I've got Charlie Hamilton with American Senior with me. We're going to talk about reverse mortgages, something that I've heard in the news quite a bit. We've all seen commercials. I don't know too much about them, and so I wanted to get a professional on the line to talk about them to see if it fits in your financial plan. Or for those listening, if you have any clients that are asking questions about it, Charlie would be a great resource to answer those questions. So, Charlie, thank you for being here. Certainly appreciate the time.
Thank you, Mike.
So, let's jump into this. First question, easy question. What is a reverse mortgage? Can you explain what that is?
Sure, absolutely. To put it in the simplest terms, it's just a way to make liquid an asset that's illiquid. So, reverse mortgage can provide you funds from your home without having to make a payment.
So, if is that pending now, just liquid and not liquid? Um, I'm assuming that means that there has to be some sort of liquidity in the home, right? If there's meaning value, there has to be some sort of value in the home in order to do this. Is that correct?
Correct. What we're looking for is a certain amount of equity in the home, and a portion of that equity we're going to make available to be able to draw on.
And
Draw
what
on.
typically is that threshold, Charlie, for that equity piece?
It greatly depends on age. The older
Oh,
you are, the more you can borrow. The younger you are, the less. So currently, with rates where they are, we're looking at people being able to borrow anywhere from 30 to 60% of the home's value.
so what does that do when you say borrow the funds, right? Obviously, there's money back. So explain that process. There's equity in the home. I want to access that equity. Does that mean the bank is paying me?
Essentially, what you're doing is you're paying yourself
Okay.
with the equity in your home. So, traditionally, your home sitting there, it's not a bank account. You can't draw from it.
Okay.
But once you put a reverse mortgage in place, it makes a certain portion of it available to use immediately, in the future, or on a monthly basis.
So is it just a lump sum of cash?
Well, that's the good question there. It can be, right. There's certain programs out there and products that are going to give you just the maximum amount of money on day one. There's other products out there that say, you know what, I don't need the money today, but I'm worried that in 10 years, maybe I need this for a major expense down the road. It's a great planning tool to be able to set aside funds and make them available in your home when it's easy to get them for when it's hard to get them.
Now, I know we talked about asking questions before we got on here, and I'll tell you what, after the first one, I completely went off script because, honestly, I don't know much about this. So, what's the difference between a reverse mortgage and, say, a home equity line of credit?
Sure thing. Reverse mortgage can carry with it a home equity line of credit. So we call it a reverse mortgage line of credit.
Okay.
They're very similar, but they also have some distinct differences. Um, when we go to a home equity line of credit, it's going to require payment as soon as you borrow funds. Right. So you must make payments on it. Number two, that line of credit is generally only good for 10 years, right?
Okay.
And then it becomes a loan that must be paid back over time. But the draw period is that 10 years. Both loans, you can draw money, pay it back, draw it again, pay it back. The great thing about a reverse mortgage line of credit is it can never be called, it can never be canceled. And in fact, it actually grows over time in available funds. And obviously, as long as you meet your responsibilities as a homeowner, pay your taxes, pay your insurance, maintain your home, all the things that we already do.
Yep. And so, look, if you have, say, $300,000 of equity in your home, um, isn't that the limit in which you can borrow, or how does that work? Because you just mentioned that it kind of grows. How does a line of credit, or how does a pool of money grow if the underlying asset is not growing?
With a reverse mortgage, there is a mortgage insurance premium associated with it. That mortgage insurance premium guarantees that your heirs, will never owe more than the home's value.
Okay.
So let's say for some reason you get it early in life and you have a line of credit, it's this big and your home value is this big. That line of credit grows to this big and your home value only grows to this big. Well, that line of credit at this size is guaranteed for life, no matter what, regardless, as long as you live in the home and you meet those responsibilities I mentioned earlier. What's really exciting about that is that portion that's bigger than the home value, you're not responsible for that, right? So
Gotcha.
that's that so it is a non-recourse loan, meaning that it can't come back to haunt you, right? Nobody's got to pay that difference. Not you, not your heirs. And I consider those folks that get to use more than their home value, they're kind of like lottery winners, right? They won the lottery. They got to use this much on home value, this much, right? Traditionally, a lot of people said, oh, good Lord, the home's upside down. You've lost everything. Well, I don't really see it that way. I see, oh my gosh, good Lord, you've got to use more value than your home is actually worth. That's incredible, you know?
So how does a reverse mortgage affect, like you mentioned the heirs, how does it affect their heirs, and particularly regarding inheritance or repayment obligations? Does it affect it at all?
Oh, absolutely. It certainly does.
Okay.
So when I sit with a client and they're, many times they're very concerned with what the heirs are doing and about their heirs, what are they going to get out of the home? Well, the great news is most reverse mortgages don't end up where the heirs aren't going to get anything, right? So in general, we're seeing that a reverse mortgage is still going to leave plenty of equity in the home at the end of the reverse mortgage, whether that's the end of the person's life or if they're selling the home to advance, to use those funds to pay for the next stage of life, wherever that may be. So I liken it to this. Somebody comes and says, well, what about my heirs? What are they going to get? I said, well, you know what? If you don't do a reverse mortgage, your heirs are going to get a tremendous inheritance, right?
Yep.
And that's super generous and fantastic of you. If you do a reverse mortgage, they're going to get a extremely generous and fabulous inheritance instead. Either way, I think it's fantastic.
I mean, there's certainly upsides. If you're going to get anything, it's a good day.
Yeah.
So let's take a step back and not think about the death side of things or planning for the exit of life.
Yeah.
But if the homeowner decides to move or sell their home, what are the implications on the reverse mortgage in that situation?
Yeah, so a reverse mortgage, it's only good for one house, right? You can't
Okay.
transfer it to another house. That would be fantastic. We'd all love that. Everybody in the reverse mortgage business would jump up and down for joy, but it's going to go away when the home is sold. So let's say they thought they were going to be in the home for life, ends up they're in the home for 10 years. The responsibility at the sale of the home is the same as if they had any other loan on the property. Whatever balance has been borrowed or whatever balance is due on that loan must be paid. The remainder of the equity is the borrower's.
Now, what if they have, and I guess this is where the numbers in my head are starting to get a little fuzzy. Mm-hmm. So you've got $1 million home. You bought this years and years ago. Let's just say you've got a $400,000 note on it still with the bank. Mm-hmm. You've got a reverse mortgage. So how does that affect the first loan? And then if they go and sell it, say for $1 million or 1.1, how does the math work and who gets the money? First bank, reverse mortgage, and then whatever's left over is theirs?
All right. So in general, reverse mortgage is going to be a first lien position. Okay. So traditional reverse mortgages. So there's a FHA reverse mortgage. It's sponsored by HUD. It is a HUD loan or an FHA loan. That loan is just kind of like the gold standard of reverse mortgage. Why is it the gold standard? Well, it's got all the buzzers and whistles. It's got, we can take money today. We can set up to get payments over time, and we can leave some of it for a nest egg, or we can do any one of the three alone. Well, that's great. So that one is going to be the first position, no matter what. Most of the time, I would say that you'd be hard pressed to find a lender to go in second position behind a reverse mortgage, just because they are not guaranteed payback. Okay. There are, you mentioned, oh, they have a $400,000 home, loan
Yeah.
on the home and $1 million house. Perhaps they'd like a reverse mortgage. They don't want to give up this beautiful loan that they got. They got it, when rates were 2.5%.
Right.
Right?
Yeah.
Fantastic. That's so exciting. Well, guess what? We have something for that. There's a small reverse mortgage second that will go into second place behind that.
Gotcha. Okay.
Right? And maybe it'll provide them $100,000 or $200,000 available to them to draw that can help them take care of things. Maybe big ticket items. I always say, oh, when you need a roof, it stinks and they're expensive.
Yep.
So if we have a big ticket item like that, or maybe there's a short-term care situation where we need an influx of funds and we don't want to tap into other retirement funds. Nice thing about it, the reverse mortgage funds are drawn tax-free. So you don't have to pay income tax. It does not change your tax bracket. And it's an alternative to drawing a lump sum from maybe an IRA or other taxable income.
Okay. So given that, so we've got $400,000 note on the first, we got 200,000 as an example on the reverse. We sell the home for $1 million. Obviously the bank gets their money on the 400,000. What happens to the rest? Do they pay back that 200,000 on the reverse and then they get the rest?
Same thing. The reverse
Okay.
mortgage got to be paid back, right?
Gotcha.
Same as the first note. The remaining $400,000 in equity, that's the borrower's to take.
Gotcha. Okay. And then, so what are the options for that early repayment then, or if they wanted to go refinance the home, does it create complications there?
No, it's really the same as any other refinance. Let's say
Okay.
they get into a situation and, by miracle, we're down at 2.5%. They want to get rid of that reverse mortgage second, put it all in one loan. They can refinance, pay off the first, pay off the second, combine it in one loan. Or conversely, let's say they get to the point and they say, you know what? This reverse mortgage second has really treated us well, right? We like how there's no payment on it. Since then, we've paid off $100,000 on our first loan, right? But our
Gotcha.
reverse mortgage second's there. Now we owe $500,000 or so. Why don't we do a reverse mortgage and just put the whole thing together and no longer have a mortgage payment whatsoever? That's something that they can do. Now they've got just strictly a reverse mortgage, no mortgage payment, ups their cash flow on a monthly basis. So if on a $400,000 loan, even at a great rate, you're still got to be pushing $2,000 a month in a payment.
Gotcha.
So if we can eliminate that $2,000 a month, well, guess what? Now we're drawing less on retirement, right? We're using the home to pay the mortgage payment and putting them in a better cash flow position.
Interesting. And so, speaking of cash flow, we'll take this a little step farther here. You and I spoke about sequence of return risk, and I don't want to get into the whole dynamic of sequence of return because that's a webinar, a conversation in and of itself, which we have webinars on sequence of returns. I'll put it in the description below. Watch that. But in terms of this conversation, if the market is down, right? Like if you got your 401k and you're getting ready to take disbursements or whatever the case is, can they use a reverse mortgage to subsidize that retirement?
Absolutely. So one of the biggest revelations that have happened in reverse mortgage started in 2012. There were multiple studies done back then. There's been multiple studies done more recently, and all of them show that by implementing a reverse mortgage early and using this to mitigate a sequence of return risk, just meaning if you're in a down market, don't borrow from your down portfolio, right? Instead, borrow from the reverse mortgage, allow your portfolio to recover. And it's been proven over and over that by doing that, you're going to have a much larger legacy value to leave to your family. And or if it's perhaps your retirement isn't that big, it's a great supplement for that, so that you're able to make it all the way through retirement without without having to sell a house or having to rely on family. Last thing that I know that I want to do is when I'm in retirement, I don't want to tax my children's retirement because I didn't plan well enough.
Nope, understood. And then the last question here, Charlie, with a lot of the compliance and regulatory things that are coming down the pipe, what do you see in the future that may affect reverse mortgages, and what do people need to look out for when even beginning this conversation?
Sure. Reverse mortgage for many years has had a little bit of a black hat,
Mhm.
that it's been wearing. There's been just numerous changes every year. FHA announces changes that are generally implemented in January. Some of those are okay. We can lend more. Well, that's fantastic. Meaning we can consider more home value, right? The other things that have happened is, we can protect maybe a spouse that isn't old enough for a reverse mortgage. They still have the right to remain in the home for life, right? So,
Oh,
so
interesting.
those are some of the changes that people didn't like before. They're like, oh my gosh, Mr. Smith passed away, and did you know Rose, she had to sell the house because she wasn't allowed to stay there because they got a reverse mortgage when she was 58 and he was 63,
Gotcha.
right? That was a black eye for the reverse mortgage world. Nobody liked that. So they've changed that, allowing, a younger spouse to stay in the home.
Interesting.
Yeah. So other things to things to look out for is, uh, how much is it going to cost me?
Yeah.
Is What are my plans with the home? How long am I planning on staying in the home? And, of course, I always refer, hey, let's speak together with your financial advisor and make sure this plan fits you, right? A lot of people jump into something, maybe they don't have an advisor. Um, that's when we talk and say, well, let's figure out what this really means to you over your lifetime.
So you bring up a good point, Charlie. The point of these conversations is really to highlight the importance of having a full financial team backing your financial plan. And you're one of the very few individuals that we've talked to that understands sequence of returns risk. But how important is it for clients to understand a collective team is better than trying to go in these siloed conversations?
Yeah, it's kind of like, okay, you go to the barn, you get the horse out, and he's got a bad foot. Well, why does he have the bad foot? Did he step on a nail? Did he do something else?
Yeah.
So what are you going to do? Are you just going to take the horse and go with it? Because what you need right now is that horse to move a wagon. Or are you going to say, you know what, we need to back up, find out what's wrong, get this fixed by a professional, bring in the vet, right? So same thing goes in a retirement plan. Anytime you're making big financial decisions, okay, how is this going to affect my estate,
Yeah.
right? Is my estate in order? How is this going to affect the rest of my retirement? Is my retirement in order? So anytime we're in one of those situations, who do we want to bring in? We want to bring in the expert, right? Do we need an attorney because we need legal advice? Well, please don't get it from me, right?
Right.
let's
Which, by
call
the way,
let's
there's a
call
there's a disclaimer in the bottom that Charlie and I, neither one of us are tax professionals or attorneys. So, I mean,
exactly.
consult
So
a professional.
do you want to know how this affects your taxes? Well, absolutely. Let's bring in your CPA. And
Yep.
guess what? When we have a full conversation with advisor, CPA, estate plan, and everybody else, maybe children, right?
You're right.
Your trusted advisors, that's family. Over and over, I sit down and I'll have, maybe it's a widowed woman, and her brother has been her financial advisor, in her entire adult life. Well, let's bring her brother in.
Yeah.
She's very concerned, and her son's is an advisor in Texas. Well, that doesn't matter. Let's get him on the phone and let's talk about this whole situation together.
No, that's amazing, Charlie. And we appreciate you being part of the National Referral Network. I know that you're relatively new to this process, but we look forward to continuing these conversations. I think this is a bigger conversation that we could have multiple times in different aspects, along with some other conversations. But we'll be putting out some articles on reverse mortgages, and we're working with Charlie on getting those to you. If you have any other questions, please reach out to us. Charlie, before we wrap up, any final comments or questions that you have?
Yeah, it's I've been in reverse mortgage for quite a while now. 8 years has been my primary focus. So what does that mean? Do I only do reverse mortgages? Yes, that's all I do, day in and day out. Do I only do new reverse mortgages? No. If you have anybody, right? If you have anybody, maybe it's an heir and their parents are getting older and they're trying to plan for the future, what's going to happen to the home, have them give me a call, right? I'm happy to help out in those situations because they can get confusing, right? It's real easy to be educated about it right when you buy something. But I'll tell you what, my car, I have to look up every time how to set up the clock, right?
Right.
So every time you're getting that mortgage statement, or you have a friend that's worried, or whoever it may be, I'm happy to help those folks. No, I don't get paid by that, but it's what drives me.
Well, I
So
think it's an important part, Charlie, because estate planners, an estate planning attorney is just that, right? But if you need a specific aspect of estate planning, then you should probably go talk to a special needs attorney or a Medicare trust attorney. And some attorneys do both of those. But you have to speak with a specialist that knows that area, especially with something with this kind of intricate behavior to it, versus just, hey, I can do that. Well, just because you can do that doesn't mean you should be doing that. So I think it's a great spot. We, like I said, when Charlie and I first talked, we'd like to keep these to 15 minutes. But then again, I had a lot of questions, so we went over. So Charlie, thank you so much. We really appreciate you being part of the National Referral Network and being part of this Professional Insight series. If you have any questions, his contact information is below. Please reach out to us with any questions. We'll get you in contact. Let us know how we can help. But Charlie, thank you so much for the time. And we look forward to talking with you again.
thank you, Mike.